Welcome to a deep dive into Apple's Cash Flow Chronicles 2022 edition. In this journey, we delve into Apple's consolidated statements of cash flows, navigating the essential realms of operating, investing, and financing activities. Along our voyage, we'll uncover intriguing examples tied to Apple's innovative products to help you truly appreciate the art of financial statements and the cash flow dynamics of a business. So, get comfortable, hold on to your iPhone or MacBook and brace yourself for an exhilarating exploration into the world of Apple's 2022 cash flow analysis. Part 1. Operating activities. Net income. In the fruitful year of 2022, Apple managed to squeeze a staggering net income of $99,803 million, showcasing the tech giant's impressive financial harvest. Net income is the delicious, juicy apple at the core of a company's finances, representing the profits they reaped after subtracting all expenses. Imagine selling a bounty of iPhones and iPads, then covering the cost of producing these sleek gadgets, paying the talented tech wizards who create them, and even providing Tim Cook with his yearly Apple-themed gift basket. What's left is the net income, a scrumptious financial treat that indicates the company's overall profitability. The item, net income, is like the star of the show when it comes to assessing a company's financial performance. It reveals the company's ability to generate value for its shareholders and how well it's managing its garden of resources. A healthy net income often means a thriving business, while a declining one may indicate a few rotten apples in the barrel. Adjustments to reconcile net income to cash generated by operating activities, unveiling the cash flow secrets. The adjustments to reconcile net income to cash generated by operating activities serve as a vital financial process that converts accrual-based net income into cash generated by operating activities. This transformation unravels the complex relationship between revenues and expenses and allows us to better understand the true cash flow generated from a company's core business operations. Imagine Apple's voice assistant, Siri, stepping in as your personal financial guide, helping you to decipher the cash you earned after accounting for all those App Store purchases. Siri navigates the intricate financial landscape, revealing the hidden connections between the net income and cash flow. Depreciation and amortization, the art of aging assets gracefully. Depreciation and amortization are crucial financial processes that reflect the gradual aging and decrease in value of assets over time. These methods allow companies to distribute the cost of tangible assets, depreciation, and intangible assets, amortization, throughout their useful lifespans, offering a more accurate picture of their assets' current worth and overall financial health. Imagine an Apple product assembly line, where gleaming machines tirelessly churn out iPhones and iPads. As time goes by, even the most advanced machinery begins to show signs of wear and tear. Similarly, the patents and licenses Apple holds also lose some of their value as they approach expiration or become outdated. Depreciation and amortization help account for this natural decline, artistically capturing the inevitable ebb and flow of asset value. Deferred income tax expense benefit. The time-traveling tax tale. Deferred income tax expense or benefit is a financial concept that addresses the difference in timing between when taxes are recognized on financial statements and when they are actually paid. This accounting maneuver helps companies align their tax expenses with the appropriate reporting period, offering a more accurate representation of their financial performance. Imagine Apple's futuristic iTime machine, a device that allows the company to travel through different tax periods. As they journey Apple encounters discrepancies between the reported income and the actual tax paid. By adjusting for deferred income tax expenses or benefits, Apple matches these temporal tax differences, ensuring that their financial statements accurately reflect the tax impact on their bottom line. Other operating activities adjustments. The financial fine-tuning symphony. Other operating activities adjustments encompass various financial adjustments that fine-tune a company's cash flow from operating activities. These adjustments ensure that a company's financial statement accurately reflects the intricacies of its day-to-day operations and provides a complete picture of its cash flow health. Picture Apple as the conductor of a grand financial orchestra, deftly managing each section to create a harmonious symphony. Among the many instruments, there are unique and lesser-known adjustments that contribute to the overall performance. These adjustments might include changes in prepaid expenses, accrued liabilities, or other nuanced financial elements. Changes in operating assets and liabilities. This section captures the impact of changes in Apple's various operating assets and liabilities, such as accounts receivable, inventories, and accounts payable. It shows how effectively Apple manages its working capital and translates its day-to-day operations into cash. Let's explore each of these items. Accounts receivable net. The financial balancing act. Accounts receivable net represents the outstanding payments owed to a company by its customers after accounting for any allowances, discounts, or potential uncollectible accounts. This financial metric provides the insight into a company's efficiency in extending credit and collecting payments, showcasing its cash flow management prowess. Now, imagine Apple as a skilled tightrope walker, balancing on the high wire of credit and customer payments. On one side of the balancing pole, Apple extends credit to customers who purchase its products and services. On the other side, the company diligently collects payments to maintain its financial equilibrium. By keeping an eye on Apple's accounts receivable net, we can gauge the company's expertise in managing customers' credit and collections, offering valuable insights into their financial health and cash flow management abilities. Inventories. The great warehouse of Apple wonders. Inventories represent the raw materials, work in progress, and finished goods that a company holds at a specific point in time, waiting to be sold or transformed into sellable products. This financial component offers valuable insights into a company's ability to manage its supply chain, production efficiency, and overall demand forecasting. An example can be from Apple's vast warehouse, brimming with all components and devices that make up their innovative ecosystem. Stacks of gleaming iPhones, rows of powerful MacBooks, and crates of cutting-edge accessories fill the space, poised to make their way into the hands of eager customers. Vendor non-trade receivables. The unconventional credit chronicles. Vendor non-trade receivable represent the amounts owed to a company by suppliers or vendors for non-trade related transactions. These receivables can include refunds, deposits, or other financial arrangements outside the realm of traditional product or service exchanges, offering a unique perspective on a company's financial dealings. Envision Apple engaging in a lively financial dance with its suppliers, gracefully stepping through the complex choreography of business transactions. Amidst their routine of trading products and services, Apple and its vendors sometimes engage in unconventional financial agreements, like depositing funds for future collaborations or receiving reimbursements for overpayments. These intricate steps, known as vendor non-trade receivables, add depth and nuance to Apple's financial ballet, showcasing the company's diverse financial repertoire. Other current and non-current assets. the treasure trove of financial gems. Other current and non-current assets encompass a diverse range of financial items that don't fit neatly into other asset categories. These assets, both short-term and long-term in nature, offer an intriguing glimpse into the lesser-known corners of a company's financial landscape and the unique resources that contribute to its overall value. Think of it like Apple's financial treasure chest, brimming with an electric mix of rare and valuable items. Amidst the familiar sparkle of iPhones and MacBooks, there lie lesser-known gems such as investments in emerging technologies, intellectual property, or even prepayments for future services. These diverse assets, collectively known as other current and non-current assets, enrich Apple's financial tapestry, showcasing the company's adaptability and strategic insight. Accounts payable, the art of settling debts. Accounts payable represents the amount a company owes to its suppliers or vendors for goods and services purchased on credit. This financial metric sheds light on a company's ability to manage its short-term obligations and maintain a healthy relationship with its business partners. Imagine Apple as an expert juggler, skillfully tossing and catching its financial responsibilities in a mesmerizing display. As Apple purchases components or services from suppliers, it creates a series of debt that must be settled in a timely manner. Deferred revenue, the art of future fulfillment. Deferred revenue represents the company's payments for goods and services that have yet to be delivered or performed. This financial metric highlights a company's commitment to fulfilling its future obligations and satisfying its customers' expectations. An example is if Apple would function as a masterful fortune teller, peering into the crystal ball of future sales and services. As Apple receives payments for its upcoming product releases or software updates, it creates a reservoir of promises that must be honored in the days to come. By diligently managing its deferred revenue, Apple ensures that it meets its commitments and keeps customers eagerly anticipating what the future holds. Other current and non-current liabilities, the financial puzzle pieces. Current and non-current liabilities refer to financial obligations that a company owes to others but don't fall under any other specific liability category. These liabilities include both short-term and long-term obligations and provide a more comprehensive picture of a company's financial commitments and responsibilities. Envision Apple assembling a complex financial puzzle, with each piece representing a unique financial obligation. Beyond the well-known components like accounts payable and deferred revenue, there are other intricate pieces, such as contingent liabilities, lease obligations, or even employee-related expenses. Cash generated by operating activities. In conclusion, the cash generated by operating activities for the period amounted to $122,151 million, reflecting the company's ability to efficiently manage its day-to-day operations and generate a positive cash flow, a crucial factor in maintaining a healthy financial foundation. Part 2. Investing Activities. Now, let's explore the Investing Activities section, which covers cash flows related to Apple's investment in marketable securities, property, plant and equipment, as well as business acquisitions. Purchases of marketable securities, a financial game of chess. Purchases of marketable securities represents a company's acquisition of short-term, easily tradable financial instruments such as stocks, bonds, or other securities. This financial activity offers insight into a company's investment strategy and its ability to diversify its assets and manage risk. Investing in marketable securities is like a game of chess, where companies must think ahead, anticipate the opponent's moves, and skillfully make strategic investments to achieve long-term financial success. Just like in chess, the key to winning in the investment game is careful analysis, strategic planning, and making calculated moves to outsmart the competition. Proceeds from maturities of marketable securities. The financial harvest season. Proceeds from maturities of marketable securities represents the cash a company receives when its short-term investments, such as bonds or other securities, reach their maturity dates. This financial activity provides insights into a company's ability to reap the benefits of its carefully planned investment strategies and enjoy a bountiful financial harvest. Imagine an example of Apple as a diligent farmer, skillfully cultivating a fertile field of marketable securities. Over time, the seeds of its strategic investments grow and ripen, eventually reaching maturity. As these investments come to fruition, Apple harvests the proceeds, reaping the rewards of its careful planning and financial foresight. These gains, known as proceeds from maturities of marketable securities, showcase Apple's expertise in managing its investment portfolio and maximizing returns. Proceeds from sales of marketable securities, the financial art of letting go. Proceeds from sales of marketable securities represents the cash a company receives when it decides to sell short-term investments, such as stocks, bonds, or other securities. This financial activity gives understanding regarding a company's ability to recognize the right moment to divest its assets and capitalize on favorable market conditions. Visualize Apple as a discerning curator of a financial art gallery showcasing an exquisite collection of marketable securities. As trends and market conditions evolve, Apple must decide when the time is right to part with certain masterpieces, selling them to eager buyers at just the right moment. Payments for acquisition of property, plant and equipment. The financial growth spree. Payments for acquisition of property, plant and equipment represent the cash a company spends on purchasing or upgrading physical assets such as buildings, machinery, or technology. This financial activity creates awareness concerning a company's commitment to invest and its growth and improve its infrastructure and capabilities. Assume that Apple is a visionary architect, meticulously planning and constructing a futuristic city of innovation. In pursuit of technical breakthroughs and improved efficiency, Apple invests in state-of-the-art facilities, cutting-edge machinery, and advanced equipment. Payments made in connection with business acquisitions, net. The art of growing Apple's kingdom. Payments made in connection with business acquisitions net represent the cash a company spends on acquiring other businesses or assets to expand its reach, diversify its offering, or strengthen its competitive position. This financial activity offers insight into a company's growth strategy and its ability to seize opportunities in the ever-evolving business landscape. Imagine Apple as a master gardener cultivating its empire through careful selection and nurturing of new business acquisitions. Just as a gardener carefully tends to each plant to ensure its growth and success, Apple strategically identifies and acquires businesses that complement its existing strength and offer new opportunities for expansion. As it carefully chooses its targets and cultivates them to reach their full potential, like a gardener, Apple understands the importance of patience, dedication, and careful planning in achieving lasting growth and success. Other investing activities The financial treasure hunt. Other investing activities encompass an array of financial transactions not covered under the primary investing activities, such as purchasing marketable securities or acquiring property, plant, and equipment. This financial category provides a glimpse into a company's diverse investments and its pursuit of unconventional avenues for growth and value creation. Similar to operating activities, an example can be that Apple would be seen as an intrepid explorer venturing into uncharted territories in search of a hidden treasure to strengthen its financial fortress. This time, the focus will instead be shifted to investing in innovative startups to secure valuable patents. Thus, Apple embarks on a myriad of financial quests that fall under the umbrella of other investing activities. Cash used in investing activities. Looking at the bigger picture, Apple is continuously investing in growth and expansion opportunities, and this comes with significant cash outflows. For the period, the cash used in investing activities amounted to a whopping minus $22,354 million. Despite the significant outflows, this investment activity is crucial for Apple's continued success, innovation, and competitive edge. It demonstrates the company's commitment to a long-term growth and its willingness to make strategic moves to ensure its future viability. Part 3. Financing activities. Lastly, let's examine the financing activities section, which covers cash flows related to Apple's equity and debt transactions, such as stock repurchases, dividend payments, and debt insurance or repayments. Payments for taxes related to net share settlement of acquired awards. The financial culinary delight. Payments for taxes related to net share settlement of acquired awards represents the cash a company spends to cover tax obligations arising from equity-based compensations for its employees, such as stock options or restricted stock units. This financial activity sheds light on a company's approach to rewarding and retaining its talent while also fulfilling its tax responsibilities. Envision Apple as a master chef, expertly blending the perfect mix of ingredients to create a sumptuous financial feast. As Apple dishes out equity-based rewards to its employees, it simultaneously caters to its tax obligations that need to be carefully managed and paid. These payments, known as payments for taxes related to net share settlement of acquired awards, highlights Apple's adeptness in navigating the complexities of equity compensation and conducting the ideal balance of employee satisfaction and fiscal responsibility. Payments for dividends and dividend equivalents. The financial festivities. Payments for dividend and dividend equivalents represents the cash a company distributes to its shareholders as a reward for their investment, sharing the company's profit in the form of dividends or equivalents. This financial activity highlights a company's commitment to providing value to its investors and maintaining a strong shareholder relationship. Consider Apple as the host of a lavish financial celebration, generously sharing its bountiful earnings with the guests, its shareholders. As Apple reaps the rewards of its successful ventures, it sets the stage for a grand event where it distributes a portion of its profits in the form of dividends or dividends equivalents. Repurchases of common stock, the financial buyback bonanza. Repurchases of common stock represent the cash a company spends to buy back its own shares from the open market, often as a way to boost shareholder value or manage the company's capital structure. This financial activity illuminates a company's strategy for managing its stock and maintaining investor confidence. Picture Apple as the maestro of a financial buyback extravaganza, skillfully orchestrating a strategic move to repurchase his own shares. As Apple scoops up its outstanding stock. It not only reduces the number of shares available in the market, but also increases the earnings per share for the remaining shareholders. This financial maneuver, repurchases of common stock, highlights Apple's proficiency in managing its stocks and keeping its investors satisfied with its performance. Proceeds from issuance of term debt, net. The financial borrowing ballet. Proceeds from issuance of term debt, net, represent the cash a company receives from borrowing money through long-term loans or bonds, minus any issuance cost. This financial activity showcases a company's ability to raise funds, manage its debt, and maintain financial flexibility. Envision Apple as the graceful lead in financial borrowing ballet, elegantly pirouetting through the world of long-term loans and bonds. As Apple secures funding through term debt, it obtains the necessary resources to fuel its ambitious endeavors while balancing its capital structure. Repayments of term debt. The financial debt settling saga. Repayments of term debt represent the cash a company uses to pay off its long-term loans or bonds, fulfilling its financial obligations to lenders and maintaining a healthy debt balance. This financial activity illustrates a company's commitment to managing its liabilities and preserving financial stability. Think of Apple as the protagonist in a captivating financial debt settling saga, heroically repaying its long-term loans and bonds to restore balance to its financial kingdom. As Apple fulfills its obligations to lenders, it demonstrates its responsibility and dedication to maintain a stable financial foundation. This epic tale, known as repayments of term debt, underscore Apple's prowess in navigating the intricate world of debt management and ensuring a prosperous future for its realm. Proceeds from repayments of commercial paper, net. The financial pendulum swing. Proceeds from repayments of commercial paper, net, represent the net cash a company receives or repays from issuing or redeeming short-term debt instruments known as commercial paper. It is an indicator of a company's ability to manage short-term financing and maintain liquidity. Envision Apple as the master of financial pendulum, swinging gracefully between issuing and repaying short-term debt to maintain equilibrium in its financial landscape. As Apple adeptly maneuvers the pendulum of commercial paper, it ensures a constant flow of funds to meet its immediate needs while diligently repaying its obligations. Other financing activities. The Financial Curiosities Cabinet. Other financing activities include a diverse range of financial transactions that don't quite fit into the standard categories of operating, investing, or financing activities. These unique transactions shed light on a company's atypical financial dealings and help to round out our understanding of its overall cash flow management. Consider Apple as a meticulous curator of a financial curiosities cabinet, collecting and managing an array of unconventional financial items that contribute to its cash flow narrative. Amidst the more traditional financial elements, Apple handles extraordinary transactions like proceeds from grants, insurance claims, or other non-standard financial agreements. Cash used in financing activities, the fuel for financial growth. After examining the last path, the financing activities, which is total amounted to an outflow of a bit more than $110 billion, we need to sum up all the parts concerning the cash flow statement and the three different sections. We can see that the decrease in cash, cash equivalents, and restricted cash amount to close to minus $11 billion. However, by adding the beginning balance of the year with cash, cash equivalents, and restricted cash beginning balances of roughly $36 billion, the ending balance adds up to almost $25 billion for the year 2022. In conclusion, the final part of the cash flow is the supplemental cash flow disclosure, which serves as a backstage pass to a company's financial performance, revealing additional details that don't quite fit within the main cash flow statement categories. By delving into these often overlooked financial footnotes, we can gain a more comprehensive understanding of a company's cash flow intricacies. Cash paid for income taxes, net, the fiscal sacrifice to the taxman. Cash paid for income taxes, net, represents the total amount a company, like Apple, pays to the government for income taxes. This metric provides insight into the company's tax burden and its impact on overall cash flow. If we continue the idea of Apple as a diligent financial farmer, tending to its bountiful cash crop. When the tax season arrives, Apple must part with a portion of its harvest, making a financial sacrifice to the taxman. The net amount paid for income taxes indicates the extent of this sacrifice and helps us understand how taxes affect Apple's cash flow and financial well-being. Cash paid for interest, the price of borrowed prosperity. Cash paid for interest reflects the total amount a company pays on outstanding debts and borrowed funds. This metric offers a glimpse into the cost of financing and the impact of debt on a company's cash flow. Now, finally, envision Apple as a savvy financial explorer venturing into the world of borrowed prosperity to fuel its growth and expansion. As Apple sets the sails on the financial adventure, it must pay the price of interest to those who have lent the company funds. By examining the cash paid for interest, we can assess the true cost of Apple's borrowed prosperity and better understand the impact of interest payments on the company's financial performance. In summary, by generating significant cash inflows from operating activities, investing in new projects, and actively managing its capital structure through financing activities, Apple has been able to maintain a healthy balance sheet and return value to the shareholders. The explanations provided for each item or row of the statement offers insight into how Apple's operations works and how they can contribute to the overall cash flows of the business. This was the fourth part of a series examining and explaining the financial statement with Apple as a leading example. For more videos, please subscribe. If you like this video, make sure to check out the next one. Thank you.